Okay, so since the last video I just talked about the box, I thought I'd just show you this really quick. Today's Friday, January 10th. Absolutely zero losing trades if you just use the chart that I've talked about for the last 10 years. And on my charts, let's see, if we go back, so 7:30 is market open for me right there. There's no trade yet, but so the prior one happened about an hour and a half before the market opened. Beautiful short here. This one worked for almost 9 points. This long here hit to the second profit, just a really quick couple points there. So then you got 9 points here, so you're at 11. Again, that's max. So you're gonna get out before that because the profit levels, are you can see where the profit levels are at. Here's another couple points. So we're at 13. This one maxes out at 11 points. So we're now at 24 points on the day. Again, I need to stress that's max. Realistically, you can pull, it just depends. Everyone's different. Everyone has their own way of getting out of the market. The profit levels show you the most likely places that the market's going to pause. But then we go long here for another 6 points. So we're pushing 30 points now. And then this short here, right here, it maxed out at 8 points. So in other words, so this run right here maxes out at 8 points. So even though we have a box here, so if you're short here and you're trailing, you're probably not done yet. These ones are really good because then you get another box while you're in the same direction. It confirms direction. I'm not saying add to your contracts. I personally like to because especially when we're nearing a period where we've already been, and so typically you're going to have an increase in volume. And so if you've taken some contracts off, I like to put them back on. That run was 8, and then this one here, about 6 points. So I lost track, 38, pushing 40 points, something like that, over 40 points. So this should have relatively easily been a 20-point day. 20 to 25 if you're newer, at least 10. You should have been able to get at least 10 points. Remember on the ES, it's $50 per point times 10, that's 500 per contract. And then obviously if you're pulling 20, you're double that, so you're 1,000 per contract. But I wanted to show this first because we just talked about it and to show you that even though on this particular day, we're not dealing with an economic situation like we were dealing with Iran, it still works extremely well. So I've had a lot of questions about backfill. This is a separate indicator. This one has something called analytics built in. So basically what it does is that there's two components to this. First, the backfill price, you can see one here, is the horizontal price. There's a red one here, red one here. Basically says that, and essentially what this is doing is it's trying to pick up on orders that are left in the market that are primed to get filled. And that's a whole nother topic, and so we won't really talk about that here, but I wanted to show you how effective this is. And you can actually use this with so many different things. If you already have a strategy, you're already having success as a trader, this is something that I would highly suggest getting, especially while it's available. And the reason why is this. These vertical lines, red and blue, what they show is buying and selling pressure. And so one of the ways that they can be used is timing entries. And so now this is pre-market, so you're not going to have a ton of movement, but if we look at what happened, and this is the ES, I like to use this on a 5-minute chart. You can use this on any type of chart. You're going to have a different formation of these prices on different charts. And the reason for that is because it is reading that chart's data. Now, for the way that I've built this, all the way from the beginning, this has been many years, I have preferred to use it on a 5-minute chart, just the way that I like it, but you can use it on anything. So if we look at this, when we look at, okay, here's selling pressure, did it drop? Well, yeah, kind of, a little bit. More selling pressure, did it drop? Yes, we had a little bit of a drop there, only 2 points there. We had a backfill price that instantly got filled, not much to do about that. And typically what's going to happen is if you're going to have a market that's going to run, you're typically going to have more of these price levels that will form. So if I scroll back to something like this, just what was this? I think this was yesterday. we have a bit more movement, and so you're going to have a lot more times where the market's just going to take off in either direction, and so those prices are going to be left. But at some point, there's a really high likelihood that those are going to get filled. So that's what those horizontal prices are for, and they can be used as targets. So if we're going to be short, where do I want to get out? Well, we've got some backfill prices that down here that have not been filled yet. We've got selling pressure, time to get in a trade. Back to where we were before, we have selling pressure that's visual by this red vertical line. And did it drop? Yes, absolutely it did. Now we have buying pressure setting in. Did it rise? Yes, absolutely. We had a nice push up here. And you can see how accurate this is. It's typically not delayed. You're typically going to get pretty accurate times. What I've tried to do all these years is do things as real time as possible. I'm not a big fan of lagging indicators. I think they serve their purpose for, looking back and doing a certain analysis. But when it comes to real money trading, and when you have a lot of money in the line, for me personally, I'm not a lagging indicator user. I can't stand them. I want real data right now. I don't want to have to look back at something. So that's one thing that you'll really like about this is it's right now. It's not what happened before. So again, more buying pressure. Did it rise? Yes. Did more buying pressure? It rose here. But see, you have to understand that we're now in this down. The market's trying to trade lower, right? But there's still buying pressure, and so it's picking up on all of these instances where the market pushes up. Much smaller one here, and then we have more buying pressure setting in into the close. So, and then we had this little tiny backfill right here, and that filled later on. So we have some nice confirmation down here. So the analytics just show with these backfill prices, okay, it's one thing to say, well, this price has a high probability of getting filled, but then it's a whole different level when you can actually prove that. And what I have done with a couple of these indicators is shown that in the form of analytics. And so what this does is it looks back to however many days you have loaded, and it counts the levels. So I have 1,266 backfill prices. 99% of them have been filled. So there's a few that haven't been filled yet, but it's 99% is extremely high. And so then this just breaks down. 872 of those were filled on day 1, 2, 3, 4, etc. So I wanted to show you that because I had a lot of questions about that, but it's a really fun indicator to use because you can see it working in real time, and you don't have to worry about lagging information because it's right now, and you can take action instantly. Okay, now this indicator is one price. This is a single price that populates, and you can only use this on futures and Forex. It populates an hour and a half before the market opens. So for me, the market opens at 7:30 a.m. So this would populate at 6. And today it was at 83.5. Now, this is a price that you can use it between 3 and 5 days a week. Not every day will there be a one price trade. This is more of a tool that you want to have in your quiver, so to speak. And what I like to do is I like to have it there so that if I'm looking for a trade and maybe 1 or 2 or 3 of my other strategies have not materialized yet, if I've got a one price level, absolutely I'm going to trade that. I know that, again, this one also has analytics built in. So statistically, over the last 259 days, because each level is for 1 day, because every day there's a new price. So this is just over a year's worth of trading days. 97% of them have been filled, and the majority of them are filled on the first day. Within the first few days, with the majority on the first day. So today, Friday, January 10th, it was a very strong price to use. And so there's really a couple strategies with it. It's very simple. Price is going to want to trade to it. So like yesterday, we were down here, it's going to want to come to it. It went to the tick of it, tested it back and forth, and then price kind of, for lack of a better term, oscillated. It kind of acted as a pivot back and forth. And so there's a lot of different things you can do with this. It kind of ended up being the high of the RTH, not the high tick, well, actually within a couple ticks of the RTH, but a very, very useful price to have in hand. And you can see why I like to have this to be ready to use it when the market presents itself. Okay, now this one here, this is called key turns. It's part of the DOP indicator. So the key turns price level is one that you would display on an intraday chart. You can use any chart type you want because it's a specific price, and the chart type will not affect this price level. In fact, I will even go too far as to say whatever you put this chart on, all it is just a display. And so some people try to figure out what this thing's doing, and it's actually not doing anything other than displaying. It'd be like turning on a movie and watching a projector. Your chart is the screen, right? So my point in saying that is that this is doing stuff in the background on something completely unrelated to the chart that you put it on. And that's why it doesn't matter what chart you put it on, because it has nothing to do with that chart. It has something to do with something else, and that's part of the algorithm. So what's really nice about this is that it's really quite simple. When price is above it, there's a bias for a rise. When it's below it, there's a bias for the market to drop. Now, you might look at this and say, well, how is that useful? Because when we opened for the Globex Open for today, so that was yesterday, so Globex opens the day before, right? So we trade overnight. So look at how this is happening here. We have kind of this rounding, this curving. So this is actually very useful, and the reason why is because if we're far extended above this key turns price, it's very likely that we're going to try to trade back to it. And you see we got literally within one tick of it, and this is exactly what you should expect from this. Now there are other days like this day where our key turns level was very close to where we opened during Globex. You can see that the first candle right here, it bounced right off of it and it held above it. So the bottom line is this: when price is above it, we want to be buying. When it gets far extended from it, anticipate the opposite to go towards it to test. And on this day, we went to the tick. The reason why there's two prices, because what's going to happen is think of like a teeter-totter, like a tipping point. All that represents is that in order for you to go from one side to the other, you have to move. And so that one tick difference, that's all that is. That's all that means, is that above here, we're going to be buying, and below here, we want to be selling. So I know we're right there. If we start having breakdowns, I'm going to sell. And if we stay above here, I'm buying. I'm looking for long positions, period. Once we go far extended above it, then I'm looking for price to do this. So we have a low here. Actually, we had a low here. We broke it by just a little. It looks like about a tick or so. But this was the real kicker right here, is we broke this low and we did not succeed past this high. So what am I doing? I'm selling this thing. Where am I targeting? Well, I know that the likelihood of it coming to this price is very high. So I want to try to get as much of this as I possibly can. You can also buy it and test it because it's almost always going to have a bounce. And so then again, we show strength, it goes to the tick, and we start buying again, right? And just to show you the continuation, you can see we've become extended and we opened up extended. What's going to happen? Boom. Now, if we break this down, there actually was, I remember this day, it was just a couple days ago, we actually had some bouncing right here. We actually had some nice breakdown trades. So you could have done like a breakdown. Those of you that are new to terms, it's like a breakout. You just go in the opposite direction, so you're shorting. So we actually had some nice trades down here. And so we had this, so you look at this and you say, okay, we're overextended. What do I want to look for? I want to look for failed highs. This high is lower than this high. This high over here are equal, but look what's happening. We're breaking down below these lows here. Do I want to buy? No. You want to sell. Okay, where do I target? Well, think about maybe here, and then get out there, go long, test it. It did bounce a little bit, and then we have breakdowns. This is a 15-minute chart, so you can't really see all the activity that's happening in this candle, but there was a lot of activity during that time. And so we trade breakdowns. When we have breakouts or long positions that fail, we go short here. So this is really nice because you don't have to risk a lot. You just go the opposite direction. In fact, I know traders that use this, they simply hit reverse. And so you're talking about ticks, not multiple points in a hit. So back to today, Friday the 10th, we sit here again. We don't have this is a 15-minute chart, so we did have some bouncing here, but now we want to be short. And so we came within a tick. This is the second time. Can it run from here? Of course. So we try it, and if it doesn't work, we don't have to risk a lot. We just go the opposite direction, and multiple points there. So extremely useful tool. This is something that I've talked about a lot. This is what I base nearly all of my trade decisions on, no matter what I'm doing, and it's really, really effective. So the last thing I'm going to show you, I'm going to use my Thinkorswim charts because so these are prediction points. So what I do is I manually put these on my charts each day. It's just part of my daily prep, and you don't have to do a few. It takes 30 seconds. If you use NinjaTrader, I do have an indicator where you can load them onto software, and then it'll automatically populate them for you, so you don't have to do that. It's not an indicator that runs a calculation. It's a line plotter. So some traders that use NinjaTrader, that use prediction points, will use that because it's much quicker than putting them on your chart. But for me, the way that I like to trade, I like to manually do it because I like to know what I'm doing. But I wanted to show you this because the bottom line with prediction points is and everyone colors their lines different. I typically use purple and orange. So the way that this works is you're going to have price will almost always, I dare say always, but almost always go from one purple line to the next. It's the progression of the market. It's the way that it flows. It's amazing how this works. I developed these back in 2007, and they work, well, phenomenally, the same as they did back then. And they are literal prices that I am buying and selling off of. These are the actual prices I'm using to buy and sell. I will typically be within 1 or 2 ticks of the price. For this reason here, you can see we got 1 tick away. We were testing that, and if you remember, our key turns price was at 68. So we were a couple ticks off there, 1 tick off the prediction point. What do you think I'm doing? I got a key turns price down here, and actually call these red lines even though they're purple, and a purple line. I'm buying the crap out of this thing because I've got 2 very strong indicators that I use that are at near the same price. I am buying that thing. In fact, I'm loading up. And where do we go? We go right to the next one. So I won't go into too much depth about prediction points, but they're highly effective. They're not pivot points. It's a completely different algorithm that I created back in 2007 that actually has nothing to do with any of this. If you knew what it was, you would think that it's the most random thing that anyone could ever come up with, and I would agree with you. But they work, and they've worked through any market condition, no matter what's happening. It didn't matter if it was what just happened a few days ago with Iran or the real estate crash in 2008. If I showed you a chart back then, it would look pretty much like this. So highly effective, extremely useful. Again, these are not lagging. These are in fact predictive because here's the opening of Globex and they're given at that time or shortly after for the next session, and they're good for the entire session. We have literally had traders pull in 6 figures in a single day. Obviously that's extreme. Don't expect that. That's absolutely extreme. But my point in even bringing that up is that what you can do with these prices is quite phenomenal. And so I just wanted to end with that. Extremely profitable day. There really shouldn't be any reason where you end the day down. Maybe you have kind of a tough day from time to time, but you should never be killed. There's plenty of tools to diversify your approach so that if you're waiting for one, there's usually going to be something available with using something else. So whether that be the box or whether that be the one price level, remember that was at 83 something. I think it broke a couple ticks, 83 quarter, something like that. Very useful price. So, if we're short off that, we know that we've dropped from here, we've broken below this 82, and yeah, we've broken through it, but not by much. It's not having a lot of success. Why is it hitting this wall up here? Well, we have that one price level. That one price level is very specific. It's calculated in a very specific way, and it is extremely useful. So all these tools together are, they're things that I've settled on over all these years. And if I look back over the last 15 years, 15 years ago is when I started my first company in this realm. There's so many tools and things that I simply don't use, because at the end of the day, it has to come down to what is making me money. And so these are the things that help me do that and have helped a lot of other traders do the same thing. So anyways, that's a wrap for Friday. Today should have been an amazing day no matter which one of these tools you used. And by the way, I will add, if you remember, we also had our backfill price down here. So I wanted to throw that in as well. When you have something like that where you have, okay, you already know you have buying pressure. I'm not going to pull up that chart, but we had buying pressure down here because we already looked at that. We have key turns and we have a red line, in my case purple. It's time to buy. And if you're short, it's time to get out, because that thing's going to have a hard bounce. So anyways, that's a wrap. And remember, there's only a matter of days left before you can get this stuff. So if you're thinking about it, you're on the fence, the time to do it is now. I've tried to price things very close to pro bono as possible, for lack of a better term. So very affordable. You should, double, triple, quadruple, quintuple your, what you pay for these items, on day one. There's really no reason not to. There's so many opportunities the market gives us. And that is a wrap. Have a great weekend, and we'll see you in the next video.